I'm Chase. I'm the Stock Sherpa on YouTube. Chase at Ever Bullish is my newsletter, everbullish.com. And on Fridays, I typically go over a stock that I like. This one's going to be a little bit of a less sexy stock, but I think it's perfectly primed for where we are in the markets right now. A couple other things first. Indices. Right now, Fridays, we're looking at a pretty flat market, a little bit up, a little bit positive. Just like yesterday, there was a turnaround midday. Not a ton of volume going on. Most of the hedge fund guys are out on their beach on the Hamptons, and most of the institutions are waiting to see what happens over the weekend. So Bitcoin is at 53.5, which I think it's already consolidated. I put it more at 56, probably by Monday. If you haven't noticed, there is a bit of a weekend volume increase. On that note, I mentioned yesterday, Fidelity is coming out with an ETF, and I do believe that will probably be the most heavily traded and probably replace GBTC in my portfolios going forward. I also read an article that Goldman is going to be creating their own sub-account. And when they do that, it might not be called the Goldman or whatever company they're going to be using, but they're going to be providing the funding and then giving their liquidity in said mutual fund or in said ETF to their higher net worth clients. So everything's looking good as far as I'm concerned on the Bitcoin front. I still don't have any problem telling people that I think it's a heavyweight in their portfolio. And it certainly does do a lot better than gold, which is up 90% over the last year, whereas, no, that's not true. It's up 90% over the last, call it 3 years, and Bitcoin's up over, 400 or 1,000%. So, anywho, let's keep moving. So, the Suez Canal debacle is something to talk about as well. I'm not going to spend too much time on it, but it does validate a lot of my conviction in the energy markets. So yesterday I recommended that EOG was a good dip buy. I still believe that. MRO is a good one. I'm going to add XOM, Exxon, to that list. Basically what's going on here is there's a barge, if you haven't noticed or heard from the news, that it sounded funny at first, but it's actually a really serious situation. There's a gigantic barge that got caught in a windstorm. That windstorm caused this huge cargo ship barge to get stuck in the Suez Canal. And now roughly 50 ships a day are backed up, and that's just bottlenecking and compounding, causing pretty much exponential losses. I've seen estimates of the highest 20% of all global trade every single week. I don't know if that's as accurate. I do know that I read once that roughly $5 billion worth of assets come westward through the Suez Canal, obviously through China and other manufacturers in Indonesia. And 4 million go the other way, so from Europe back going the other direction. So that's not a good thing. That could absolutely have an effect on tech, but we're just going to watch it. And I don't know. I just think they should just blow the whole thing up. It seems like that makes more sense than trying to move it. But I'm also not a merchant marine. So anywho, those are going on. You may see a slight effect or maybe even a panic sell-off that provides opportunity. In industrials, materials, and then in energy, I'm still extremely bullish on, because they're either going to have to reroute where all of these goods go, which is going to require more energy, or they're going to have to port, and they're going to have to fly them or drive them or truck them or bus them. So that's kind of where we're going with that. And in my mind, it's actually not something to be taken as likely as it sounded at first. So thought I'd teach you about that a little bit. Final thing, part of my trading strategy is to make a report, and I make reports. I put these out for free on my website of downloadable PDFs, and this is one of my first ones. So this isn't a new stock. I actually wrote this article, blog post, whatever you want to call it, on January 8th. This is for FND. FND is the Floor and Decor company, Floor and Decor Holdings. So what they do, think about them as a Home Depot or Lowe's. Or I don't know if the big box, what other big boxes are out there, but a garden center in a way, and more so in the home improvement space. So they provide direct to both retail folks that are retail clients that are rebuilding their home, deciding to renovate, and then also they provide directly to contractors and subcontractors. So I wrote this article on January 8th this year. The reason I wrote it was I felt that Home Depot and Lowe's are kind of square trades. Everybody knows to buy Home Depot and Lowe's. They have great margins. They have great employees. It's an absolute good company. They're a mega cap. The reason I'm putting this article out today is that Floor & Decor has not done so well this year. It is up a little bit. I think it's at 95 right now. I saw that the target estimate from all analysts is 110. I think it's more like a 140, 150. So there's a lot of upside, especially because just yesterday, Home Depot and Lowe's both hit their all-time highs. So I kind of want to buy the run of the litter in this case. I do think that they're a terrific company. A couple of the things I have here written in my article that I will repost on my blog under everbullish.com/investing articles. It's not a sexy stock, I get it. It's not Square, it's not Twitter, it's not Snapchat. But there's just a really easy top-down kind of Peter Lynch economic, use what you use, buy what you know type philosophy going on here. I'm sure we all know those people that spend a big bunch of money buying a house and then they renovate it. And home sales are at an all-time high. The second thing is there's a lot of people that are losing their houses, and a lot of people that are also flipping their houses based on the low interest rate environment. One of the first things you do to jazz up a house is buy hardware, install new floors, appliances, whatnot. So I have a little bit more to say on that. I do try to keep these try to run them less than 10 minutes. Overall view on the market. So Floor & Decor, everbullish.com/investing articles. I'm going to repost this. Please leave comments. Please like. Please subscribe. I love a follow on all social media. I will review very quickly. LabU trade that I talked about yesterday. LabU was up about 10% yesterday. Intraday, it finished up about 8% from when I recommended it. It's fallen a little bit today. It's back at 72. It's back at 74 right now. LabU is the biotech triple index on the NASDAQ biotech subsector. Basically what you're doing is you're saying, I like this and I like it enough to risk some downside extra participation for 3 times upside participation in the sector moving. This tech sell-off, I'll say it again, does not have anything to do with interest rates, in my opinion. There is a rotation of value, mentioned that yesterday, but that rotation of value doesn't exclude companies that are literally solving cancer, curing certain types of cancer. Zion Pharmaceuticals is one of those holdings. I've been recommending that one and talking about that one for a long time, and I finally popped. They have almost essentially eradicated prostate cancer, which is like the second leading cancer in men. So there's another company I used to recommend all the time called Edit. Personally still own it. It's gone from 20 to 80. And I believe it even hit 100 at one point. So I don't see the fact that an interest rate on a 10-year treasury ticking up to roughly 2% is going to stop anyone from actually investing. I think what's really happening is that institutional trading and high frequency trading is knocking off a bunch of limit orders so that large institutions and hedge funds can suppress the price and then buy another entry point because biotech's not going anywhere. Final thought, going back to Bitcoin, I do love Bitcoin. I do love it as a long-term hold. I do love it as a long-term trade. There's a company called SUEZ that used to correlate and doesn't as much anymore. SUEZ Limited is the actual name of the company. The symbol is SUEZ. It's been bouncing a bit more erratically than the other Bitcoin miners, and I believe it to be very undervalued, so take a look at that one, SOS. And another final thought would be, give a look-see if you don't like participating in individual stocks. If you still believe in the long-term buy and hold and don't value stock selection, that's okay. XLE, it's the energy ETF. It's going to own ExxonMobil. It's going to own Chevron. I believe those are the 2 top holdings. It's also going to own, in a small proportion, some of the small West Texas companies like FANG, which is Diamondback, Williams Company, some of the other pipelines. So it is a more diversified way to gain traction on the energy sector, but I'm going to try to find the good in this and look at the SUEZ Canal debacle as a way to make some cash in the energy space. So, all right, we're running up on 10 minutes. Chase at Ever Bullish, also known as the Stock Sherpa. Please send me any type of companies that you'd like to recommend. Please follow on social media, Ever Bullish on Facebook, Ever Bullish on Instagram. Still working on Twitter and trying to fight the Snapchat frenzy. So with that, I'll leave you. Happy trading. Remember, Fridays aren't particularly a good time to make any big time decisions. I am happy to see the market turn yesterday. I do expect an up week next week. My Sunday recap's coming out here in a couple of days, followed by the typical schedule. So thank you for following. Please tell a friend, tell a stranger, tell a neighbor, and let's get rich.